What is going on, investors? Today we're going to talk about dividends. And will this investing strategy actually make you rich? I mean, if you look at YouTube, everyone is getting rich off dividends, you know? This is all you see. I mean, this is like a new trend, is dividend investings. Quickly, we're just going to go over what is a dividend and the pros and cons of a dividend. A dividend is basically a distribution of company profits that go back to a shareholder. They pay you for the profits that they make. And there are a ton of videos about the pros and cons of dividends, and I'm going to go over them quickly. The pros of dividend investing is that it's basically a really passive form of investing, which meets one of my requirements for investing. The company actually pays you real money in real time, and dividends come in periodically. If they don't come in anymore, you probably shouldn't own that dividend stock anymore. And the next thing that's really good about dividend investing is that you don't have to wait for a company to promise a new product in order to increase the shareholder price of the stock. Where if you're going to do a buy low and sell high strategy, you're always looking for earnings reports and earning calls to see how the company's actually doing, and you're looking to see if that earnings report is actually going to increase the price of the stock. Versus dividend investing, this is less stressful. You don't have to pay attention to what a company is doing every single day or month. You're not looking at the earnings date. It's a really less stressful way of investing. And also what's good about dividends is that they are taxed at a lower rate than other forms of investment. All right, we're going to go into the cons of dividend investing. The first con of dividend investing is that you do get a lower return from 3 to 6%. You can increase your return for dividend stocks, but with higher returns, you're going to get more risk with dividend stocks. The next is that there's no guarantee that a dividend will actually be paid out. As part of a dividend investing strategy, you should be paying attention to if a company cuts their dividend, because that can be an indicator that something is going on. Something can be going wrong where you should be cutting that company. And it's part of my strategy too. The third con of dividend investing is diversification. A lot of dividend paying stocks are more in traditional forms of business, such as utility services, energy producing like oil companies, and you're missing out on higher growth tech stocks, which don't pay a dividend, but the stock price increases exponentially on those stocks. But that's with any form of investing. You're always going to be missing out on something. So part of my strategy is dividend investing is a piece of the pie in my dividend investing portfolio. Will dividend investing make you rich? Yes and no. Dividend investing is a tool that you should be using in your portfolio. It's a way to diversify your portfolio. The wrong way to think of dividend investing is that it's going to make you rich. That is not the way to think of dividend investing. You need to think of dividend investing as you're thinking long term for your future. For example, if you want an avocado tree, you need to plant it for 20 years in order to get avocados. It's the same thing with dividend investing. You need to plant that tree 20 years before in order to get the fruit of your labor. And that's what dividend investing is. You're going to plant a tree now and reap the benefits later. The thing about dividend investing is that the average annual yield is just not there. 4%, that's really great for this form of passive income, but that 4% will not make you rich. This is a very classic example of the power of dividend investing. You have two people, Dominic and Sean, and they both start at these ages, 25 and 35. They both start with $5,000 and they both contribute $300. It's assumed that the dividend tax rate that the government charges for these dividends is 25%. The dividend yield is basically how much the company is going to pay back to their shareholders. And the expected increase is going to be 4%. And the years invested for Dominic is going to be 40, and for Sean is going to be 30. And we're assuming that they both want to retire at 65. So at the end of this, Dominic is going to have $615,000. Sean have about half of that. And the annual dividend payout is about $23,000, and Sean is about half of that. A monthly dividend of $2,000 for Dominic and a monthly dividend for Sean of $1,000. This is great. However, the problem is that we want to retire early. A monthly dividend of $2,000 and $1,000 is great because this is a form of passive income that's just coming in. One of my indicators is that how much money will it take to reach $4,000 a month? Because to me, if you can have $4,000 come in passively a month, you can retire. And I calculated, just doing back of the napkin calculations, if you had 1.2 million, if you got 4% of that per year, you would have about $48,000, which would be about $4,000 a month. And this is the crux of dividend investing, because you need a large sum of money in order to retire, and we want to retire early. So in summary, I think dividend investing is a great form of investment, and it is part of my strategy too in investing. However, the yield is just too low, and you need a large sum of money in order to hit your goals for passive income. That's the point of this channel, guys. We are going to retire early. Dividend investing is just a part of my portfolio, and it's a way to diversify our investments. And it's a really good way at maintaining wealth.